the Facebook one, or I think it is. Yeah, well, that worked easy. Well, let me quickly. So we're live now. I'm going to go ahead and share your slides and give you kind of control over them. And all right, so you should have control of that screen now. Do you?
Looks like I do. Yeah, it's a little bit of a lag, but that's okay.
All right. So first, tell me a little bit about kind of your background. What led you to CVF Capital Partners, and what experience you have? I guess introduce yourself.
Sure. Yeah. So my name's Brian Hoblit. I have about a decade of experience in commercial lending. So helping middle market companies get loans, financial services, et cetera, to help them grow. While I was doing that, I spent a lot of time with private equity firms. CVF Capital was actually one of my clients. And so I've been close to them for a number of years, ended up in a couple operational roles as a CFO, and this opportunity presented itself last year, and I thought it'd be a really good fit. CVF gives basically financing to companies where bank loans are not available. So many times this is expansion capital or it's buyout capital, stuff like that, where there's just not enough collateral for a bank to get comfortable, but where a company is very successful and growing. And we've been very successful doing that in the Central Valley of California. That's the original acronym for CVF, Central Valley Fund. But we've now expanded to the Western US and have clients now in Washington, Oregon, Idaho, Nevada, California, and we've made investments in the Intermountain West and in Texas as well.
So what did you guys kind of forecast initially for 2020? What were you guys kind of expecting of it for it?
Yeah, so I'll give a little bit of a preview here, because every year we do a forecast for our portfolio companies and for our limited partners. And so our consensus forecast from December 2019 was pretty much in line with what everyone else was thinking, which was slow but steady growth, kind of a late cycle, typical late cycle where things are slowing down, but there was nothing really in the economy that was out of balance. So we did not see anything really causing an impact. All that said, we did talk about the threat of an exogenous threat, an exogenous shock. And we even presented this in our presentation, where we said that one of these shocks could, completely take down the economy. A classic example is 9/11, and now maybe even a more classic example is this COVID crisis. So, what we had forecasted, you can see where we were compared to some of the other dozen or so reports that we looked at and kind of scrubbed and then came up with our own opinion. We were a little bit more on the negative side, but not too much, still kind of in line with everyone. Looking at like 1.9% GDP growth, kind of slow but steady growth, nothing crazy. Everything, as I said, was in balance. So we were feeling pretty optimistic about the year coming up.
Now, for people that aren't familiar with this, can you describe what an exogenous shock is?
Well, it's something that really can't be predicted. So when forecasters look at the economy, they're never really going to say, hey, there's a 10% chance of an exogenous threat, so let's bake that in. It's just something that comes out of nowhere that you don't anticipate. COVID-19 is just an absolute classic example of that. There was no one at the end of December who was thinking that global pandemic was going to hit in the first quarter of the year and cause basically a complete shutdown of the global economy.
Okay. So how does that overall impact your guys' long-term year outlook on these things?
Yeah, so that's a great question, and really the short answer is it's too soon to tell. So whenever we talk about recoveries, we talk about the shape of recovery. a V recovery is something where you get a big shock and then you rebound pretty quickly and you're back to normal, where the entire recession might only last a quarter or so. The other shape is more of a U shape, where, you know, there's going to be a recession, maybe even a depression for a few quarters, maybe even longer, maybe a year, and then you'll start to ramp back up. And the last one is an L-shaped recovery, where it just takes many quarters or even years to come back to where we were at. A lot of that was from the Great Recession. That was kind of an L recovery, where it took the markets multiple years to get back to where they were at. So right now we have some forecasts for 2020, but you can see there's a lot of kind of iffiness in them right now, because we just don't know the overall depth on this. So we're not going to know until the economy can get back up and running. So we have some very fuzzy numbers in there. GDP, we expect to be less than 3% negative on a contraction basis for the entire year. The main driver of the economy recently has been personal consumption. That's the second column there. We expect that to go negative as well. It's just really hard to go out and spend money if you have to stay at home. And then the S&P right now would probably up that range for where we think it's going to be by the end of the year, but we still don't know if everyone's still at home 3 months from now. I find it hard to believe that the overall market's going to continue to be going as it is.
So then let's kind of shift, I guess, over to the recovery efforts the stimulus efforts that have been enacted to reduce the shock or the effect of the shock. How are those impacting, or how is CVF Capital Partners leveraging those?
Yeah, so we've encouraged all our portfolio companies to apply for the CARES Act. And I'll talk about this on Friday. And really the main provision in there is the Paycheck Protection Program. This is a $349 billion economic aid, the largest economic aid in U.S. history, that was enacted really just a few weeks ago. The rollout on it has been, frankly, quite clunky, both on the government side and on the banking side. And it's taken some small businesses, medium-sized businesses, longer than they expected to get approval. And in some cases, they haven't even gotten approval. And we do expect those funds to run out sometime this week. They probably will re-up it for a little bit more money. But that's the one we're really encouraging them to apply for. The other two programs on there that we'll talk about briefly is the EIDL. This is really a program that's designed more for natural disasters. So in order to qualify for this, you have to be in a federally declared disaster zone. The federal government did declare the entire country one of those zones. And so this is now available to people. Not quite as much money. There's a little bit of a different application process, and it's significantly smaller than the PPP. So it hasn't gotten as much press as the other one. And then the Federal Reserve Main Street Lending Program really just was announced last week. I wouldn't be surprised there's going to be some tweaks to it. So we'll talk about that a little bit, but that's more for larger companies. The larger loan amounts. The nice thing about the PPP loan that I mentioned is it can be forgiven. So the loan can be converted into a grant if you meet certain stipulations. It's not true for the other two, for the EIDL and the MSLP. Those are actual loans that will have to be paid back to the federal government.
In PPP, that's Payroll Protection Program?
Paycheck Protection Program.
Paycheck Protection Program, and that's the stimulus to enable you to hold on to those employees through this, instead of being forced to lay them off because you don't have funding for it, and then having to bring them back when it comes on. Now, I have another question for you that's kind of around this, is that this is what's, initially a supply shock. People can't go out, or companies can't bring people into work to build things. It's not a typical, I guess, shock where there's like a contraction that leads with a contraction of demand. It's been more of a, I guess, contraction of supply, labor supply in many respects. How do you see companies kind of adjusting to that? Because when there's a contraction of demand, it's honestly, okay, well, you're going to sell less and you're going to produce less. But when all of a sudden it's a contraction of, your ability to supply people things, or even, provide people the services, it's a little different. How do you see companies kind of adjusting to that?
Yeah, I would say that there's a demand aspect to this as well. That's going to be a shock. I mean, for instance, the demand for going out to eat is going to be impacted while everyone's staying at home, and in the medium term after that, where people are going to be, if you go out to dinner and someone's coughing, are you going to be worried that they still have this virus that there's no cure for? So I do think there is going to be a demand shock. How this all plays out, it's really still too early to tell. We don't know how deep this is going to go, and we don't know what the shape of that recovery is going to look like. So I don't have a great answer. I don't have a crystal ball on what this is going to look like going forward.
Yeah, no one does. Brave new frontier on that.
Yeah.
Any kind of optimistic kind of projections that you have about when things start to come back? Do you think they'll come back strong? Do you think we're going to have just another that it will be slow? I know we talked about whether it was going to be a V or an L, or maybe kind of somewhere in between, like a U. With how strong the economy was before, do you see, if there is a return, that it's going to be a kind of a big bounce, or whether this is going to have longer lingering effects?
Yeah, again, it's too early to tell. I think that there are going to be some long-term effects on this, and the way people do business is going to change. Restaurants are, some of the restaurants that have not opened up are not going to open up. That's certainly going to happen, which is really too bad, particularly in Sacramento, where that scene was really starting to thrive in downtown and midtown. Other aspects of the economy, until we start to get the economy back onto its feet, I think it's just too early to tell. We just don't know what the overall ramifications are going to be. I mean, Smithfield Foods is a good example. It's a pork processing facility in South Dakota that just had to shut down. They're shut down indefinitely. We don't know when they're going to open up again. And so the entire meat supply, they're the largest pork supplier in the country, and this is one of their largest factories. We don't know when they're going to open up again. So what downstream impacts is that going to have on everything? We kind of don't know at this point. So I am cautiously optimistic. 2020, well, the second quarter of 2020 is going to be horrible. I think everyone kind of agrees with that. Yeah. Whether the third quarter turns out to be more of a recovery, I'm a little less optimistic than I think some of the analyst reports that I read recently. I think it's going to be a little bit of a longer time to get back. But I do think once we figure this all out, we will return back to normalcy. But that's probably going to be 2021, I think, when we start to see things back to where we were at.
So people should start planning for how they're going to grow in 2021.
Yeah, right.
So is there any restaurants out there that you really hope people order from so that they make it through this time?
We're trying to, in our family, we're trying to do takeout, a couple times a week just to support these guys. It's hard for those guys. I mean, there's bars out there that are going to shut down. I really feel for them, particularly because that's such a low margin business. And when you take away 70% of your revenue, there's almost nothing you can do.
Yeah. I wanted to go, and then I'm going to go and select kind of the small business sentiment that you had there. Businesses operate on major razor thin wires or razor thin margins. It's not, there isn't, when you hear about, businesses having a bunch of cash, that's not most businesses. That's not your small local businesses. And we should do what we can to be able to support them. So, I do the same thing, try to go and eat out. All this trying to be healthy, now it's our duty to eat out and order food on it. But I'm hoping to see a lot of exciting pivots and look forward to talking with you Friday, 9 a.m. I put the Eventbrite on the feed, so if people are interested in that, click it, register, sign up, and come ask Brian some very, very hard questions.
Oh, thanks, Thomas.
Yeah, you're full of a lot of knowledge on it, and I think you got a lot of value if people come in and ask. So thank you very much, and talk to you later.
Okay.